Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about one of my favorite REITs, Realty Income. As always, if you do enjoy these types of videos and you haven't yet subscribed to the channel, please do so. It helps me out a ton. With that being said, let's first take a look at my portfolio dashboard. For my regular taxable investment account, I've invested $29,127 so far. My current value sits at $38,765, which gives me an unrealized gain of about $9,648. Now, this is basically the highest my portfolio has ever been, and a lot of that is thanks to Apple's recent surge in price. After the recent technology presentation where Apple did unveil their Apple Intelligence, the stock price rallied significantly, driving my portfolio up to a total return of 33%. So far, I've earned $973 worth of dividends, and my yearly projected income going forward is $693 per year. Now, if you have noticed, my yearly projected income has been growing slower this year compared to my videos from last year because I'm investing in slightly lower dividend yielding companies instead of those higher yielding companies that I was doing before. My total portfolio yield for the portfolio is 1.79%, and my yield based on my cost is 2.38%. Right now, I'm sitting on a cash position of about $4,767, and if I see any good opportunities in the market, I'm definitely going to jump right in. Now, as a bit of a disclaimer, I don't actually own Realty Income in my taxable account, as you can see from my holdings right here. I actually own it in my Roth IRA because I want that tax advantage returns. One thing to keep in mind with REITs is that their dividend is usually pretty high, but it's paid at the unqualified rate, meaning you're a lot of times going to be paying more on taxes on those dividends. A good way to take advantage of that is to put it in a tax advantage account like a retirement account. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So taking a look at Realty Income's page, they're a very investor-focused company, and they're really just a real estate investment trust that invests in freestanding, single-tenant commercial properties in both the United States, Spain, and the United Kingdom. Now, almost all of their properties are subject to triple net leases, which basically means that the tenant agrees to pay all expenses that have to do with the property, such as taxes, building insurance, and maintenance. And it might not seem like a big deal, but to me it definitely is, which is a big reason on to why I invest in Realty Income compared to some other REITs. Now, as I was mentioning, the company is very investor focused, and as you can see right here, they even advertise and they've trademarked the term the monthly dividend company because what they're best known for is their monthly dividend payments. Most companies do pay their dividends either quarterly or sometimes annually, but Realty Income pays their dividends every single month. Now, for most people, that doesn't matter that much, but what's nice about it is it helps compound your dividend reinvestments even faster than you would normally, and it also helps for those looking for consistent dividend income, let's say for retirement. The company has paid over 25 years of consecutive dividend growth, making them an S&P 500 dividend aristocrat, which is absolutely fantastic. Looking at some of their statistics provided on the website, we can see that since their IPO in 1994, they have produced a 13.6% compound annual return, which actually does outpace the broader S&P 500 market. In terms of dividend growth rate, it's been pretty good as well at 4.3%, which of course is not super strong, but definitely outpaces inflation. Now, what I should mention is that over the past couple years, their dividend growth rates have actually slowed down a significant amount, but they've still held up pretty nicely, and we'll have to see where they go from here. Due to the higher interest rates that we have experienced, it definitely makes sense for the short term, but maybe in the long term, they'll be able to grow this dividend faster once again. So far, they have paid out 647 consecutive monthly dividends and counting, and they've announced 107 consecutive quarterly increases. Now, most companies only increase their dividends once per year, but Realty Income makes an effort to increase them at least once per quarter, which is great. The faster the dividend increases and the more frequently that happens, the faster your dividend snowball can kind of compound and take effect. If we do take a look at their dividend history, we can see how frequently they've been increasing this dividend. We can see that right now they're paying 26.3 cents per share per month, and before they were paying 26.25 cents per share. At the beginning of this year, they actually were only paying out 25.65 cents per share, but they've already done 3 increases so far, which is amazing. Now, although the growth rates have been slower, if we take a look all the way down here, we can see how much they've increased since, 2015, and we can go even further back to look at some of the rates from, let's say, 2010. They were paying out 14.4 cents per share back then, and then fast forward to now, like I mentioned before, and they're paying over 26 cents per share. I have no doubt that this company will be focused on increasing their dividends for as long as they can, which I think as a shareholder that's looking for some dividend return, this is a great sign. Another way to help visualize their dividend growth, which you can find on their website, is this graph right here. Basically, in 1994, they were paying 90 cents out per year total for dividends. And fast forward 2024, they're now paying $3.15 per year, which is a pretty big increase. We can see that some of their faster dividend increases happened early on from about 2001 to 2009. And then we can see that again, there's a big jump from 2012 to 2013. But since then, they have actually slowed down a decent amount. Comparing a $100 investment into Realty Income since its IPO compared to the major stock indices, we can see that Realty Income has actually significantly outperformed both the S&P 500 and the Dow Jones, which is pretty awesome to see. Now further in this video, we will take a look at its more recent performance compared to S&P 500, and the results might surprise you that it actually is underperforming by a decent margin for the past 5 to 10 years. Now, if any of you guys are considering investing in Realty Income or any of their competition such as Agri Realty, what I recommend you do is go to their investor homepage and look at their investor presentations. They give a very detailed rundown of how the company's operating and their expenses, income, and holdings. For today, I will just keep it brief, and we're going to take a look at some of their high quality positions that they keep in their diversified portfolio. So their biggest position right now is Dollar General, which actually has been struggling a little bit these past couple years, but it's a very strong company with a pretty wide moat. Following that, they hold Walgreens, which is a company I'm not as comfortable with them holding. I do think Walgreens is on a decline. Its stock price has not been doing so well. Their sales are not as strong, and I think the company itself is not great. Now, you guys always ask me in the comments why I don't like Walgreens. The big reason is I can never imagine myself buying anything unless I'm in a pinch. Everything in the store is always overpriced in my opinion. There's always better options to go shop elsewhere. Afterwards, we do have another affordable retailer in Dollar Tree and Family Dollar, and I think these companies are going to be doing fine going forward, but they have been closing down some of their stores, so definitely a little bit of concern there. Now, the rest of these positions do get smaller from here, so I'm not going to highlight all of them, but we have 7-Eleven, which I do believe is a fantastic investment, and we have BJ's, which is also very good. I wish they had more Costco warehouses because I definitely like these warehouse-style companies. Red Lobster is a bit of a bummer to see down here because if you guys have been seeing the news, they are filing for bankruptcy, so we'll have to see if they stay open or not during this ordeal. For CVS, I have similar opinions as I do to Walgreens, though I do think CVS is positioned a little bit better than Walgreens, but Walmart and Tractor Supply are both very solid stores that I don't mind seeing in their portfolio. Now, the company is diversified very well among different industries. Grocery stores making up their number one spot at 10%, which I think is very safe. Convenience stores at 9.5%, which I don't think is too great, but also not too bad. And then dollar stores, which includes Dollar General, Family Dollar, and Dollar Tree, making up 6.5%. I am glad to see home improvement stores this high up at 6.1%. That includes companies like Lowe's and Home Depot, which are both very strong companies in their industry. In terms of where their tenants are located, we can see that the UK comes at number one at 11.1%, but really the United States outperforms it by a ton, making up most of their portfolio, with Texas being right behind the UK as just a singular state. Now, breaking it down even further, we can see their tenants fall into different categories. We have the service-oriented category, including 7-Eleven and LA Fitness. We have non-discretionary, including Tractor Supply and CVS Pharmacy. And we have low price point, including BJ's and Sam's Club. Now, for non-retail, we do have companies like FedEx and hotel resorts, and we do have also a mix of several companies here in different categories, like Walmart is both low price point and non-discretionary. The reason I show you this is to show that this company's tenants are very well diversified into multiple different industries and categories. Now, before we go any further with our financials, I wanted to show you my personal holding in the company just to be transparent with you guys. So my average price paid for this holding is $52.43, and the current price is $53.37. And the reason this is highlighted red is because the current price is very close to my average price paid, which might indicate for me that's a good time to add more money into this position. In total, I purchased 49 shares of this company over about the past year, and my shares with dividends reinvested is actually 50.1 shares, so that's pretty nice. I've invested $2,569, and my current value is sitting at $2,673.84. There's about a $100 change or 4% in gains. Now, I do expect this position to fluctuate a lot over the next couple months. As we have seen, the Fed wants to keep rates higher for longer, and that's definitely going to hurt these kinds of real estate investment companies for a while. Now, assuming Realty Income does make it out of this high interest rate environment, I do expect them to actually do very well going forward. I think a lot of what has been hindering their growth over the past couple years, and actually what's been causing their decline of the last couple years, is the higher interest rates. In the meantime, the company has been able to continue doing acquisitions and hold many of its current positions, which is going to set it up really well in the future. So far, I have earned $58.92 from dividends, and now for the moment you guys have been looking forward to, my 50 shares of Realty Income going forward will be paying me $155.81 per year, which I think is fantastic. That's 3 shares of Realty Income at the current price is basically for free. Now, before everybody does come at me at the comments, yes, I'm aware dividend income is not free. There's both taxes on dividend income, and of course, it's part of your total return by holding this company. However, I do like to consider this dividend income as bonus money used to invest into more shares without me having to put in more capital, and I like that for growing both my position and my future dividend income. And lastly, Realty Income's current yield is about 5.83%, and my yield on cost is 5.93%. And I thought it could be fun to use my future value calculator in order to simulate how much I'll get paid from Realty Income going forward. Like I said, right now I have only 50 shares of this company, but let's assume that at some point I might have 100 or 200 shares of this company. We could see how much I'd get paid from dividends and how much my portfolio will be valued at that time. If you guys do want to learn how to make your own future value calculator, I'll attach a link to the video right here on one of the cards, and I'll also put it in the description of this video. So currently I have $2,600 worth of Realty Income in my Roth IRA, and the annual yield is sitting at 5.83%. Using their 5-year CAGR, we can assume that their dividend growth will be about 3.55% going forward. And for price appreciation, we can start by leaving it at 5%, but we can go up and down based on how we feel this company is going to perform in the future. Now, what I should mention is I am using $0 for my annual contribution just to simulate what would happen if I didn't invest any more money in this position at all and only reinvested the dividend income that I received from the company. So after 10 years, my portfolio will be valued at $6,109, and my dividend income per year will be $213. So it'll basically double in about 10 years. By that point, I would have earned $1,800 worth of dividend income, which would have been reinvested back into the company. Now, if we take a look at the 30-year mark, we can see that's going to be valued at $25,000 with $428 worth of dividend income per year. And of course, it's a very small position, so that's why the dividend income is so much lower than some of you guys might expect. By that point, $8,000 would have been reinvested into the company, which is not bad at all. And if we want to take a look at the 40-year mark, we can simulate that right now. We can see that it's $48,000 worth of portfolio value at that point in just Realty Income and $600 of dividend income per year from Realty Income. Now, this calculator does take a decent amount of assumptions into it as it's doing these calculations, of course, but it just gives us a nice baseline to go off of. Now, if we wanted to assume that I'm putting $1,000 per year into Realty Income specifically, we can see that my dividend income by year 40 would have grown a lot more to $3,470. And it's important to keep in mind this will only be one position, of course, of many positions in my future Roth IRA. Now let's hop into Seeking Alpha real quick just to take a look at some of this recent performance we have seen from Realty Income and some of the recent financial metrics. Now I'll keep this pretty short, but if you guys do want to see a more detailed analysis of Realty Income, definitely check out this video right here, which I'll leave pinned, and I'll also leave in the description down below where I do a full in-depth analysis of the company and talk about whether I'm buying shares or not. So year to date, the company is down 7%, which is not great at all. And in the past 1 year, it's down 12.77%. If we take a look at the 5-year and 10-year performance, you can see that the 5-year performance is also negative, and the 10-year performance is only slightly positive at 22% return, but this does not include dividends being reinvested into the company. Now, I do agree that recent performance has been pretty disappointing in this company, and if you guys are looking for just straight up total return in terms of growth, this might not be the company for you. For me personally, it does help diversify my portfolio since my taxable account does not hold any REITs whatsoever, and I would like some exposure into this industry as well. Not only that, but in a tax advantage account, I do like the extra dividend income I can receive from it as it's helping me grow and reinvest into this position. In terms of its current price, it's actually not that close to its 52-week range. It's about halfway up there, but that's because after the Spirit Realty acquisition by Realty Income, the stock price tanked a lot in 1 or 2 days. Since then, it has recovered pretty quickly, but has been fluctuating ever since. You can see in the past year, it started out pretty high at $62 per share, and since then, it tanked down all the way down to that $45 mark like we were talking about. And once again, kind of increased back to $60 per share and has since cooled down, hovering around the $53 to $54 per share most of the time. Looking at the revenue, it has increased very aggressively over time. A lot of this has to do with acquisitions, of course, so it's not the only metric that we should be looking at. Now, one of the most important metrics to take a look at for any real estate investment trust is their AFFO per share. And as we can see, it is missing a couple years like 2021, but over time, it has been increasing very nicely. Taking a look at their dividend scorecard, we can see that, like I said before, they're a dividend aristocrat with 26 years of consecutive dividend growth. Their current 5-year CAGR sits at 3.55%, and their pay ratio is right around 74%. Now, 74% is pretty high, but something to keep in mind with real estate investment companies that they have to pay most of their earnings out in dividends back to their shareholders. So this is actually pretty good for a company of this size. Their forward-looking dividend yield is sitting at 5.9%, but if we do see some aggressive stock price appreciation, we can expect this yield to drop significantly over the next year or two. Taking a look at this graph right here, it does show that their dividend yield is currently sitting at about the highest it has been in the past 5 years, which if you're using dividend yield theory could show some signs of undervaluation. And just to better illustrate their monthly dividend history as well as their increasing dividends, we can see in the past 10 years, look how dense this is. Dividends getting paid out every single month and then increasing every single quarter basically. And if you look at their max time frame from their IPO in 1994, we can see the same exact picture right here and even bigger scale. Now lastly, this isn't the most accurate valuation to take a look at for REITs, but we can see their price to earnings ratio over the past 5 years. And what we can tell here is that back in 2019, it was pretty high at about 63. And the same can be said for 2022, was sitting at around 82 price to earnings ratio, which is very high. Fast forward now to 2024, though, we can see that it dipped all the way down to about 35. And right now it's sitting at around 52, which compared to its historical average, is actually pretty solid. Now, just because a stock has a lower price to earnings ratio over its past 5 years doesn't actually mean that's undervalued. So definitely keep that in mind when you're researching this company and making your decision. It's also important to keep in mind what your investing goals are. If you're looking for the most aggressive total return available, this is definitely not the company for you. But if you are looking for consistent dividend income as well as diversification, maybe into real estate, this could potentially be a good option for some investors. Personally, I'm going to keep holding this company, and if I see any big dips in the stock price, I'm going to continue adding small positions as I go. As always, that does bring us to the end of today's video. I really hope you guys enjoyed this look into Realty Income and my position in this company and how much I'm getting paid in dividends for my 50 shares so far. If you did find this video useful, please leave a like on this video and subscribe to the channel if you haven't already. I do post weekly investing content. If you do want to see a more detailed deep dive into Realty Income, I'm going to leave that video right here on the end card. And if you guys do want to see my dividend income for the month of May, check out this video right here. Other than that, I want to thank you guys for watching, and I will see you next week.